Hello and welcome to Spot the Market, our weekly roundup of financial markets. This is Marcello Zanardo, CEO Mercury Partners Academy and adjunct professor at Ca' Foscari University. And we're talking about the week up to the 31st of May. In terms of news, Wall Street went to T+1, meaning one-day trade settlement for the first time in a century. Eurozone inflation crept up in May. China manufacturing fell, and markets didn't care much for Donald Trump's conviction on 34 counts in New York. In terms of the main equity index in the US, the Dow Industrial fell by almost 1%, the S&P by 0.51%, and the Nasdaq Composite by 1.1%. In terms of the weekly winners and losers, on the winning side, best performing financial instruments were for the week energy, real estate, utilities, and the Swiss franc. And if we look at the losers, there are mainly commodities. We had NYMEX natural gas, corn, soybeans, copper, wheat, all down for the week. If we look at the big picture in terms of year to date across asset classes, Bitcoin in US is still up there, up almost 61%. The Nikkei 225 is up by 15%, gold by 13.3, Nasdaq by 11, and S&P by 11% almost. Again, the biggest loser remained the fixed income camp with the international treasury, emerging markets, local bond, and global corporate all down between 6% and 3.5%. Looking at the main equity sectors, the GICS, global communication services, global tech, and global financials remain the three best performing equity sectors year to date. And real estate and consumer discretionary are the worst two performing sector year to date. Let's have a look at the stocks taken from the Wall Street Journal for the week. Salesforce was down by 20% as they posted lower than expected quarterly revenue and they cut their outlook. On the M&A deals, ConocoPhillips agreed to acquire Marathon Oil in a $17.1 billion all stocks deals. American Airlines fell by 14% as they cut the outlook for the second quarter, and it's parting ways with the Chief Commercial Officer, Vasu Raya. Looking at stock that reacted very well to results, we're looking at Gap, which was up by 29% as they posted higher quarterly sales across the four brands after some disappointing results. As we mentioned earlier, it's the first time a former president is found guilty of a crime, as Trump was found guilty on Thursday by a New York jury of 34 felonies. The Trump Media Technology platform was down in terms of shares by over 5%. And finally, Kohl's, the department store, posted quarterly sales and earnings that missed expectations after some initial disappointing results, and the shares were down by 23%. For the week, after the Institute for Supply Management released yesterday, we expect the European Central Bank to announce their decision on Thursday. Expectations are for a cut in the short-term interest rates by a quarter of a percentage point to 3.75%. So all eyes will be here. And on Friday, the Bureau of Labor Statistics will release the jobs report for May. In terms of the Academy, we invite you to visit our website, Mercury Partners Academy, where we offer internship opportunities on the employment page, and to follow us on our social media for the many activities we do also with institutional guests. Again, this is mainly an educational publication and video, and we do not issue an investment recommendation. That's all from me for this week and for the Academy. Stay tuned and we'll see you soon. Thank you.